Hello friends, welcome to Man and Money channel. In this episode, we are going to do a fundamental analysis of Infosys. As you all know, Infosys is a Bellwether IT company. It was founded in 2nd July 1981 with an initial capital of just 150 US dollars by the great people like Mr. Narayana Murthy, Mr. Nandan Nilekani, Mr. Chris Gopalakrishnan, Mr. Sibulal, Mr. Dinesh, and Mr. Ashok Arora. The current CEO of Infosys is Shalil Parekh from 2018. Infosys provides consulting services, outsourcing, and next generation digital services to its clients. It is the second largest IT company in India, with first being TCS. 56% of revenue for Infosys comes from its digital services. The solution offerings include AI-based analytics, big data, engineering, digital products, IoT, modernize legacy tech systems, migrate to cloud applications, so on and so forth. Remaining 43% of the revenues come from the core services. It comprises of traditional offerings of the group that include application management services, proprietary application development services, independent validation services, product engineering, infrastructure management services, and traditional enterprise application implementation and support, etc. The products and platforms of Infosys indigenous products and platforms include Infosys Finacle, which is very popular, Infosys Makinish, Panaya, Infosys Meridian, Helix, etc. If you look into the revenue breakup for Infosys, financial services forms 32% of Infosys revenue, while retail segment has a 15% of Infosys revenue. Communication, telecommunication, and media has 13% of Infosys revenue. Energy, utility, etc. falls 12%, and manufacturing has 11% of Infosys revenue. High-tech engineering has a 8% of Infosys revenue, while life sciences and healthcare has 7% of Infosys revenue. Geography-wise, North America has 62% of the business for Infosys comes from North America, 10% from rest of the world. Europe has 25% of its revenue, and only 3% comes from India. If you look at the clientele for Infosys, almost 185, it caters to 185 of Fortune 500 companies. It has 3,800 million plus customers. That is the customers who give business more than 100 million US dollars. There are 38 companies and 6450 million USD clients. Its clients include ICICI Bank, Daimler, Mercedes-Benz, HSBC Bank, Goldman Sachs, Johnson & Johnson, Accenture, US Army, US Navy, IBM Corporation, Deutsche Bank, and many more. It has an employee base of around 3,15,000. It had an attrition rate of 28% in the last financial year. It has a few subsidiaries such as Infosys BPM, Edgeworth, and Simplus. Now we go into the financials of Infosys. The quarter result for Infosys has been reasonable but has not met the analyst expectation. But if you look at last 7 years, the sales of the organization has almost tripled in last 7 years. In March 15, it being 53,319 crores versus 1,46,767 crore in March 2023. But that has not amounted to the profit due to ever increasing employee costs that to post COVID. So at 29,811 crores of cost spent on employee has now increased to 78,374, absorbing a lot of their costs. They have a very good dividend policy. Almost 14,069 crores of their total revenue has been distributed as revenue, as dividends. The profit before tax is 33,322 crore, and the profit after tax is almost 24,095 crores. Infosys has had a compounded sales growth of 14% over last 10 years, 16% over last 5 years, 17% over last 3 years, doing considerably consistent overall on the sales, while the profit growth has been a bit of a decline with 10% in over 10 years, 5 years profit growth CAGR is around 9%, while 3 years looks to be 13%. The stock has given a handful of return for the long termers with around 15% dividend, 15% of CAGR with almost 4% dividend yield added to it, and a 5 years 15% CAGR for 10 years, while 16% for a 5 year and 20% for 3 years. The shareholding patterns have been very consistent for this organization, with promoters holding almost 15.14% and FIIs holding around 35.09%. Domestic institutional investors hold 33.59%. Public has around 15.67%, and rest of them being a very minimum numbers being with the government, and the others with 0.19 and 0.33 respectively. So this gives us a strong confidence that the FIIs, DIAs, and the promoters, the big hands, have a reasonable holding on this organization. The corporate action so far has been good. The dividend, it has issued almost 17 rupees 50 paise as dividend on June 2023, and October 2022 it has given 16 rupees 50 paise as a dividend, being a reasonable dividend. So the yield has been really good. So the dividend yield stands at 4%, and the industry PE of 24.7. Sorry, the company's PE of 24.7 compared to an industry PE of 27.2, which says the stock is undervalued. The dividend yield is 2.38%. The analysts in June 2023, Motilal Oswal has given a buy rating, while Yes Securities has given a buy rating with 1,388 as the target price. Disclaimer: this video presentation is intended only for educational purposes, and we do not endorse or promote any product. Any investment made by our advice are subject to market risk. We are not a SEBI registered advisor, hence take advice from SEBI registered advisor before investing. Thanks for watching. Please like and subscribe our channel Man and Money.